Hey guys, what's up? Alec back with the daily stock market, and we had a huge green day on Friday. Cloudflare was up 27%. Redbox is being super volatile, up 26%. Redfin was up 14. DraftKings was up 9.6%. We did a call option on DraftKings, and they were up around 17% on the day. We made hundreds and hundreds of dollars on the close friends list. So if you want to become a more advanced trader, not only at stocks, but also option trading, go ahead and reach out to me because I have a few more spots available right now. Make sure you're subscribed with post notifications on because in the next video tomorrow, we're going to do a full earnings update. If you want a screenshot, look at Monday. We have Palantir, Upstart, and a few other big companies like Marathon, Lemonade, all reporting on Monday. Tuesday, Coinbase, some other stocks, EVgo, Unity, Ralph Lauren, the Trade Dex, Roblox, Spirit, Norwegian. Okay, Coinbase, which we already talked about. Capri Holdings, which is an interesting one. Wednesday, Jack in the Box, Wick, Wendy's, PaySafe, Fox. After close, we have Disney, which is going to be in this video. We have Matterport, Dutch Bros. We have Bumble, which is not that interesting of a stock. Thursday, we have Rivian, Hut 8, and the list goes on and on and on. So start commenting below which stocks you want me to talk about in the video tomorrow and the upcoming videos on earnings this week. But in this video, what we're going to talk about is the most highly requested stocks, and some of those stocks are Coinbase, Disney, Ford. So let's jump right into this video. Without any further ado, just drop a like on this video, share with a friend, and subscribe with post notifications on. So the first stock that we have to talk about is Coinbase, up 4% on Friday with an intraday movement of 13%. But that's not the real reason everyone wants me to talk about Coinbase. It's because if we zoom out to the 1 week chart, we can see that they're up 52% just in the span of 1 week. If we pull out to 1 month, they're still hot. They're up 80% in the past 1 month. Okay. Needless to say, though, if you pull out to the year, they still are down 73% from highs, even with that 80% rally. And from lows, we actually saw them down 86% Coinbase. Now, personally, I have price alerts set under $75 per share. I think they will go under $75 per share again and closer to the $60 range, $65 range. So that's really what I'm waiting for. We can see that Coinbase does have its earnings coming up, so it's going to be very interesting this week. Coinbase is actually going to be reporting earnings on Tuesday. They're a very profitable company in the past, reporting a $7, $5 EPS, $3 EPS. And this earnings, they're expected to report actually a negative earnings, which could be a negative thing for the stock. Here we see some answers that people are wanting. What is Coinbase doing to stay ahead of its fiercest competition, such as FTX and Crypto.com? So Coinbase is going to be answering these questions in the event. What is the plan to get the price back close to the IPO amount? How can you decouple the stock's price performance of the company from Bitcoin price? I think that's a really great question because I don't think there's a clear answer. I don't think there is a way to decouple it from Bitcoin's price. With that being said, Bitcoin is in the toilet right now. So therefore, Coinbase is in the toilet. If you believe that Bitcoin's going to get back to 40K, 50K, 60K, and new all-time highs on Bitcoin and Ethereum, then it should be a no-brainer to just dollar cost average into Coinbase right now. Because if that happens, more hype, more transactions equals more money for Coinbase. And if Bitcoin goes back to $60,000 per coin, we'll see Coinbase closer to $200 per share. And I think there's a good chance for around a 200 to 100% rally on Coinbase if we see Bitcoin back at new all-time highs. You can also see that I am doing a swing trade on a Coinbase. We're already up 70% on that swing trade. I'm going to be cashing out some of my profits now. So we're at least going to take 50% of our profits out. And I'm probably going to honestly cash out majority of that just because I think Coinbase can swing back down. So I bought at an average cost of $54 per share. We're up 70%. We'll take the profits now, for example, wait for Coinbase to go back down to 65 or lower, $60 per share, and then we'll buy our shares back get a discount, and take some profit at the same time. So if you want to learn swing trading techniques like that also, we don't only do options, we do options, swing trades, and we also do a lot of long-term trading. So if you're a long-term investor and you have like a Roth IRA, for example, or just a long-term account, it's good to have those accounts, but it's more important what you put in those accounts. So if you're putting in the wrong stuff in your IRA or long-term accounts, that's going to hinder your performance overall. So that's why we talk about long-term investments in my private trading group as well, because they're just as important over the long term. And you want to fill your long-term accounts with the best possible stocks that are going to get you the biggest return, that you can just set it and forget it. And remember, Coinbase is reporting this week, so there's a lot of headlines going on. Coinbase stock surges, admin crypto expansion deal with BlackRock. Meta rolls out NFT feature for Coinbase. Okay, Coinbase shares soar 10% in boost from meme stock traders. Never take it financial advice from Jim Cramer. CNBC host criticized over Coinbase call. New York Times, the humbling of Coinbase. In just over a year, the United States' largest cryptocurrency exchange went from a triumphant public offering to a crypto winter of cutting costs and layoffs. So overall, it seems like Coinbase is not expected to shine in this upcoming earnings, but the outlook isn't all bad, and they could surprise also in earnings, so it could be risky to be betting against them. While second quarter revenues will likely decline, recent announcements bode well for Coinbase. So remember, if you want to see exactly what stocks I'm taking out and what option contracts and expiration dates, strike prices I'm taking out coming before earnings season, we already hit on DraftKings, PayPal, JPM, and many more double-digit earners and triple-digit returns on the option contracts by playing options and leveraging our money. So when a company reports bad earnings and they go down 15%, our option contracts benefit off that greatly. Okay, moving on over to Disney stock reporting earnings on Wednesday, so watch out for that. Now we have Disney stock rallying about 10% in the past month, but that's nothing compared to the past year, down around 50%. However, it has recovered a little bit, so from highs to where it's at now, it's only down around 42%, which is still interesting. But it is still at 2017 prices, 2018 prices. And let's dive in a little bit deeper to see if Disney's even a good stock to be holding for long term, if they're maybe going to beat earnings and rise a little bit, or if they're going to fall on earnings and we can buy them at a lower price. And that might be good for long-term investors. So let's see what's going on with Disney under the hood. This is a pretty good article here. Disney pounding the table bullish ahead of Q3 earnings. Disney is set to report fiscal earnings on August 10th on Wednesday. Shares have underperformed this year against concerns over consumer spending weakness and the broader macro uncertainties like a recession. We see room for earnings beat this quarter to kickstart a new rally higher, supported by a positive outlook and solid fundamentals. Okay, so if we scroll down, we can see that we've had a pretty tough year with Disney, dealing with some headline-making controversies in addition to macro headwinds, with shares down more than 40% from its 2021 highs. Ahead of the next week financial Q3 report, we are reaffirming a bullish call on the stock and expect the next big moves from Disney to be higher moves. Reports of the strong guest levels across Disney's theme park, along with the continued momentum in streaming service, can open the door for an earnings beat. The potential that Disney can brush aside concerns of a slowdown in consumer spending and a broader economic weakness may be enough to kickstart a new rally in our stock. In our view, the opportunity here is to pick up a high-quality market leader at a discount that maintains a positive long-term outlook. Remember, they're at 2017 lows, basically. Why did Disney shares fall? The company last reported its Q2 earnings back in May with revenues of $19.2 billion, up 29% year over year, which also represents a milestone, climbing above its pre-pandemic Q2 2019 benchmark. On the other hand, its EPS of $1.19, while that was up 37% from the period last year, it was still 32% below the result from 3 years ago, highlighting the depressed earnings environment. In this case, the issue has been the significant investments towards Disney's direct-to-consumer streaming service, including Disney Plus and ESPN Plus, which are now paying off for them, and they just released a lot of new Disney Plus shows in the last quarter, which could be another bullish things for this specific earnings season for Disney. The media and entertainment distribution segment operating income has dropped this year, holding Disney back from even stronger profitability compared to significant optimism from subscriber growth goals in 2021. Results from peers like Netflix, for example, which have lost members, have worked to dampen expectations of Disney's streaming potential. So that's some risks that we can see with Disney. Is Netflix had one of their worst quarters, and one of their worst years also. So if Disney's anything like Netflix, that could be a bad thing. So if you want to scroll down and actually read all of this, we're going to skip through the article a little bit, go to Disney's Q3 earning preview. Disney gets a chance next week to set the record straight in what we can see as a critical earnings report set for Wednesday, August 10th, after the market closes. The current consensus is calling an EPS of 99 cents, which, if confirmed, represents a 24% increase over the period last year. The revenue forecast at $21 billion, up 23% year over year, would break a quarterly record for the company, driven in a large part by the earnings and growth streaming. Okay, so here we can see a little chart for Disney. We see several reasons to expect a big top and bottom line number with room for Disney to exceed expectations. First, all indications are that the company's core parks and resort business has been otherwise immune to any economic slowdown. Specialized Disney-focused publications have been publishing reports all year, and the parks have been crowded and regularly sold out through the required reservation system. This includes properties not only in Florida, but also Disneyland California and even Disneyland Paris. The theme here ties into overall strong demand for leisure and travel as continuation of pent-up demand following the pandemic. Another dynamic at play is aggressive price action on Disney's part, not only between daily entry tickets and annual passes, everything from food and beverages to hotel room rates. Again, the trend suggests that consumers are willing to pay up for Disney experience without the demand missing a beat. And I think Disney is going to be that way for the next few years at least, in the next 5 to 10 years at least, I should say. Okay, we also saw new things like Miss Marvel. We saw Star Wars originals like the Book of Boba Fett. We saw Obi-Wan Kenobi, which was a huge one. But even more impressively has been the momentum in ESPN Plus, as subscribers grew 62% over the past year to 22.3 million. The company recently announced an increase to their monthly subscription rate to $6.99 to $9.99. The impact here is significant considering the incremental $3 per subscriber per month translates to over $800 million in additional revenue. While nothing has yet to be announced, investors can also look forward to a potential monthly subscription price hike to Disney Plus, which compared to Netflix or even Amazon Prime, appears to be a bargain at the current rate of only $7.99 for Disney Plus. Okay, remember we also had Thor: Love and Thunder in theaters now, along with Black Panther: Wakanda Forever, and also Avatar 2 set for this year, highlight the number of moving parts that Disney keeps interesting. So even further earnings and the further year could be bullish because they have more movies coming out. Now, I'm not going to go through all this stuff, but if you want to pause some of these highlights, some of these screenshots here, and take some pictures and read the rest of the article on your own time, I would highly recommend that. There's only a few more paragraphs to get through, but it could add a lot more time to the video, and I don't want this video to be too long. So let's move on to the next stock. Okay, let's finish this video off with a quick Ford Motors update. They reported last week, and what's interesting and why they're in the video, they're up 34% in the past month, which is a great return for a lot of investors. And interesting, they sold off around 53% from lows. Now, if you watch some of my last videos, I said around $11 per share is where I do want to buy them. I pretty much timed Ford Motors perfectly. Again, I have some price alerts actually set at $12 per share this time, $11, and I even have some price alerts set at around $7 and $9. as well to buy a little bit heavier. So my biggest price alert is between $9 and $11 per share, where I think is the sweet spot for Ford Motors. If we scroll down, we can see that they actually have a P ratio of 5, implying they're a good deal even right now at $15 per share. They have a dividend yield of nearly 2, implying they're a pretty good dividend stock. And keep in mind, they were $13 per share in 2018. So it's almost like traveling in time a few years back, almost 5 years. And if you get Ford under $12 per share, I think that's a pretty good long-term hold, especially if Ford continues to execute on the whole electric vehicle front, and if they continue to be a leader in the space. Remember, this company was founded in 1903. Also, they're an American leader, and betting on Ford is almost like betting on America. I think Ford will be doing just fine over the next few years. However, again, I'm not a huge Ford enthusiast, so even if they get to $12 per share, I'm not going to be putting thousands and thousands of dollars in Ford, looking for growth elsewhere in the auto sector space, okay? And if they get to $7 per share, $6 per share, $5 per share, that's probably when I'll be actually loading the boat on Ford Motors. So make sure you set those price alerts so you don't have to constantly remember what your goals are. Your phone just notifies you when the price hits the desired price. And that's what it's all about, is having someone tell you what's the best price alerts. And the good thing about the close friends list too in the coaching is you can message me and ask me specific stocks. Like, hey, what's price alert on this stock? What's the price alert on this stock? So that's the best thing about the program, is a lot of people in my students don't have family members to talk to. They don't have friends to talk to about stocks. Nobody's into stocks, but they're different, and they are into stocks, but they don't have anyone to talk to. So that's what I'm here for, is to chat about stocks, let you guys in, help you out, give you some expertise, and actually become a more advanced, developed professional trader in the stock market. So guys, I hope you enjoyed that video. Make sure you message me on Instagram if you want to join the private list and coaching program as well. Just reach out to me on Instagram, shoot me over a message, and I'll shoot you over an application so that way I can see what kind of trader you are. I can help you out the best way possible. And then I'll shoot you over my website, and you can look over my website, see if it does make sense to you, see if it's inside your budget, and if it does, then we can build some wealth together in the stock market. And also, I'll add in the option trading program for you at no extra cost right now as well. So if you want to see my option trades, that's the program you want to message me about. I post all my expiration dates, my strike prices, when I'm buying, when I'm selling, my swing trades, my long-term investments, all in that private trading group, and also do email updates, so you'll be on my email update list as well. So guys, thank you for all the love and support on this video. Share with a friend, like this video, comment below what stocks you want to see from earnings, and I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.